Hello, and welcome to another edition of the Zach and Nicholas show. It is Friday, the 5th of September, and we're all ready to go back to school. Various issues in the financial area this week, but one of them actually crosses over into lifestyle, which I think, since obviously you're a very thin person, very svelte and everything else, amount of exercise, and I suppose you do yoga and Pilates every morning. But I'm a bit of a fatty, and I've been on the Mounjaro, as you can tell, for many days now. And all of a sudden, I was there just thinking how wonderful it is. You're losing weight. You don't have to do anything; just sit there like a big blob and lose weight. And just inject yourself every week, which is okay. It's not too painful if you keep on eating. And all of a sudden, Eli Lilly or somebody just doubles, triples the price of the product. I mean, it's just outrageous.
Yes, so the doubling of Monjaro as a price. I mean, obviously it is an impact again from what's going on in the US. I mean, I saw that they there was a lot of outrage, so they've made some sort of compromise. I don't know if it's going to make a significant difference to you, Zach, but
Well, I think it's
I
like
think
if you're on the starter package, which is like 120 quid a month, then it goes up to 170 or 80. I think they were going to say there's an 80 quid discount if you beg on your knees or if you're really fat or something like that. But it is just quite funny that this is the best. Apparently, you lose 20% of your body weight and 20% of your brain cells as well, probably at the same time, which doesn't affect most people. And so it is the leader in the pack. It's better than Ozempic or Wegovy. They're 15%, 10% each. So this is the best one. And it's just like, fatties everywhere. And obviously it's not being fattest because I'm a fatty myself. They've been kicked. It's a sort of punch in the gut, really. And, for them, that's one of their biggest organs. So it's a very painful thing to happen. But it shows, I suppose, pricing power and also, monopolies and stuff like that. But, Eli Lilly are the company. They've got the best product so far. And that's about it until somebody can come up with a pill that you can just take and every week and not inject yourself like a heroin addict every Sunday or whenever you choose to do it. They are ahead, and it's been transformational. I think it's something actually which probably will have an effect on the hospitality industry. It has effect on clothing industry. I mean, it's almost everywhere really. It is not just a feminist issue. It's a massive issue, and I think the government. I think you have to be sort of like giant haystacks or sort of literally round to get it on the NHS, which is
Oh,
actually.
it's extraordinary. The age, and I mean, I know within my personal network people who have type 2D, diabetes, etc., who can't get it. And it's extraordinary. Who can't get it on the NHS. They're paying for it privately. They
I mean,
can't get it on the
yeah.
NHS, but
Yeah, I mean, if there's anything you could do for society, it would be to make it thinner. And I suppose I'm just thinking about all those, the gym memberships and stuff like that. Who needs to go to the gym anymore? It's fantastic. You don't do anything. Just sit there and watch TV. You can watch the Thursday Murder Club and lose weight at the same time. Really good.
That's fantastic. There might be a counterintuitive effect on gym club, as you put it,
Mm.
which is that I think a lot of people don't go to the gym because they don't like the idea of looking shall we say in Division Two compared to some of the people who go regularly. And if you can give people confidence to feel that they look fine in gym kit, might actually encourage more people to go. So conversely, or counterintuitively, it might be good for the gym industry.
Oh, and actually, it does actually make you feel like because you think you're going to get somewhere with the cycling or the walking and everything else, you actually do it. Whereas you can, with a normal diet, actually, whatever you exercise, you tend to, as soon as you get back to base, you're back on the cream cakes and everything else, and you probably eat more than your, 10,000 steps and everything else like that. But it is something which, having been on it, I just think from a stock market point of view and all those, the Diageo shares. And I mean, the people are already, Generation Z is already like not drinking so much because they obviously like the way that society is shaping up. Whereas the older people are just drinking themselves to death because they want to get out of this, what do you call it, Orwellian nightmare. So you have all those things, but it is interesting from, it's probably one of the more interesting aspects of finance, and the things that we look at on a day-to-day basis is probably the best. It sort of brings a chuckle and a smile to your face and everything else. But I don't have to buy any new clothes now because all the three upgrades that I've had from going from 12 stone to 20 stone or whatever I've done, I can just go back to the old clothes that I was wearing in 1988 or 1998, and they'll be just as stylish now as they were then. So you're obviously you're a bit like sort of Armani, so you always have that classic look. But I tend to get me on the wrong side of fashion, as you can tell at the moment. So anyway, I had to
Well,
mention
the
that.
upside, Zach, is that you look more up to date, whereas I just I save money over the long term. I always go on cost per wear,
Yeah,
hence German Street and Savile Row being favourites because on the
yeah,
cost to wear basis,
yeah.
I save a lot of money. I
Yes, well,
don't
no, but I
I
think
don't get to be trendy.
yeah, but no, but a lot of middle-aged men who gradually every year you put on a bit of weight, they won't have to buy new clothes for ages now. Their suits and
Yeah.
everything else. It's going to be a big thing. It's a big thing gradually. So, and the other thing actually, they can put the price up, they can double it, triple it, but actually. I think, most people, they're hooked on it. And it is like, once you've lost 4 or 5 kilos or whatever you've lost in a few weeks, that's it. I mean, they've got you. I mean, they have got you. So it's interesting from so many, perspectives, none of which I'm sophisticated enough to do an ACF type of analysis of it. But it is, the pricing power thing, the stickiness, the supply demand. It's got everything that you could possibly wish for. It's probably like an MBA thing or something like that. Everything you could possibly wish for because they could double, triple, quadruple the price, and actually probably more people would go for it. It becomes a status symbol.
I think there's an element to that. I think it's an interesting approach to to a drug or to a therapy, let's say, to use the trendy term, as to a therapy approach. I mean, never speak too early with drugs because you need these huge longitudinal studies. But there's some sense, when I look at the research papers on this, when the team look at the research papers, although this is for now, this is very much a private statement. It's not a ACF research statement. There's some sense that it might be a little bit like aspirin in that it has many applications and that it's pretty benign, which gives it the potential to be one of the most innovative and useful developments in therapies, since aspirin. And there aren't many candidates you could really honestly say that about. But until proven otherwise, and this is always the problem with drugs, of course, until proven otherwise, it does have some of those characteristics. And again, just to restate, that is not currently an ACF view. That is a private view of the team discussing it over a few beers and a glass of wine. But it's really interesting. And I agree with you. I think it has a lot of things that are positive from an investment point of view, which is that it would seem as well that most people will require a maintenance dose afterwards, unless they can use it to make that difference where it changes their lifestyle because they get into the habit of eating less and eating sensible type, more regularly from a metabolic point of view. And then, as you say, the gym makes them feel like, well, actually, that could be worthwhile. I could actually see a return on my gym effort, and I don't feel embarrassed about going to the gym, and I don't have to look at all these kids who are in perfect condition because I don't look bad in my gym kit. So I think there's a lot of things that it could be transformational. Yeah, it could be one of those quiet revolutions. Well, not so quiet, but it could have
No,
been one of those unexpected, very positive
it
revolutions.
is. I think probably started doing this when I started on the drug, on the treatment or the therapy. Sorry. And if you look at the first one and look at this one now, I think I look 5 years younger. I mean, it literally think it's that it's supposed to reduce your biological age, and I do think it's a
Yeah.
bit like. I don't know whether it's psychological, but it is a brain drug as well. It does sort of say, if there's a big cupcake on the table, normally you say, "Oh, right, I'm going to eat that," and then all of a sudden, other people are eating and say, "Actually, I won't have it," and you don't feel remorse. You don't feel that
Yeah.
remorse that you know. So it's a big psychological. It's
It
like a
is.
mind-altering drug, which is, I think it's amazing because normally, oh, I can't, it's like, say when you've gone to the pub and you can only have one drink. You feel so bad. You've got other people there, but here you don't feel bad. So it's an amazing thing. And I'm sure there'll be probably other ways of
Yeah,
using it, not just it's almost like a what do you call it, antidepressant
psychoactive.
or one of those type of drugs as well. Because I think that's all linked, the depression and sort of motive self-esteem and everything else is all linked to those. But that was the
Yes,
first
I think
thing.
that's
That was the
absolutely
first thing I
right.
wanted to. Sorry.
I just want to come with what on the psychological part of that. Yeah, that is a really fascinating aspect to it. That key element where you don't feel you're making a sacrifice.
Yeah, no, but it's just it's brilliant.
Incidentally, it's one of the best ways to tackle any kind of addictive behavior or pattern you wish to break.
Mm.
Sports psychology focuses a lot on this. You're not giving something up. So yeah, fascinating area.
Yeah, no, it is a fascinating area, and we'll see how it works out. As I said, if I drop dead between now and the next one, you'll know that it didn't go well. But no, there's a couple of things this week actually. Apparently, if you look on LinkedIn today, it's the fifth anniversary of me working for ACF Equity Research. And I'll say before you say anything that I have to say it's one of the jobs where I've been totally underpaid and totally overworked. I think in terms of the sacrifices I've had to make over the last 5 years. But it's one of those things that I do other things, but the biggest reaction I get on LinkedIn is congratulations, Zach, on your work anniversary with ACF Equity Research. I mean, it really it's the only response I get all year. And I've had that now for 5 years. It is amazing. And there's something
Well,
about
I mean,
ACF.
I'm obviously delighted, Zach.
People are just so impressed. Well done on all your good work and everything else. And it really is, it just keeps you going. It just keeps you going in life. It's like a psychological Mounjaro. And then the final thing is actually on Sunday, the 7th September, is actually my birthday. And so, I will be entering my 60th year, which I'm very proud of if I actually make it. But there's just all these milestones around at the moment, just amazing. I mean, obviously the ACF thing is more important than my 59th
Well, of
birthday, but
course.
but
I certainly should be using your it's like working for Manjaro, but I will go back to the recording and that sounds like a great strapline for recruitment.
right. Well, because I've been waffling on about something which is totally irrelevant to what we should be talking about, although it isn't. I wanted to talk about this week. The first thing I suppose on the serious point is just on gold. Gold going to a new high. It's supposed to be a battle with the Fed. So Trump will say to the Fed, "I've never liked you anyway. You're unelected body." And you've been ruining this country since 1913, et cetera, et cetera. I'm the president. I want you to lower interest rates, and I don't care what you think about your remit or anything else. But actually, you shouldn't even be there in the first place. So gold's going to not only $3,800, which is the level I think it's going to go to probably by the end of this month, but $5,000, by the end of the year, et cetera. Any view on that?
Yes, I mean that's the GS target, isn't it? The Goldman Sachs target of about $5,000. I'm clear. I know, Zach, you're looking at it from a technicals point of view, but interestingly, from a fundamentals point of view, the team are more comfortable with $4,000 than they are with 5,000. I guess the big spanner in that could make Goldman's right and everyone else wrong is as you suggest, what does Trump do with the Fed? Because there are various things going on. That obviously there's central bank buying. I mean, gold is now the second outside the US. Gold is now the second biggest central bank asset. So for the first time, it's overtaken the euro. So it was US dollar, your treasury bills, euros, etc. And now it's US dollars, gold, euros. So that's never happened before. It's being bought as an inflation hedge. You've got huge retail or personal investor interest. You've got obviously a huge number of ETFs buying. You don't have enough gold being dug out of the ground at the moment. So any tick up in demand is ratcheted quite nicely. There's quite a nice gearing on that in terms of price effect. And the underlying concern is that you will get higher inflation. making treasuries less attractive. So two things there. Your capital's being pinched from you, and the other thing is where can I get a better yield, better return. You've got a weakening US dollar, which is pretty much what everybody thinks will happen if the Fed is not independent. And Trump then says, well, we're going to cut interest rates or raise them according to how I think it needs to be done, as he is a highly experienced economist, and the markets are not terribly confident that he is a highly experienced economist, and they're certainly not confident about there being a non-independent Fed. So that drives everybody into gold as an alternative asset, and of course, it's a self-fulfilling cycle, like a lot of these things. And then fundamentally, there isn't enough gold being dug out at the moment anyway. And of course, it's a 10-year lag to make up for that supply demand tightness.
So is
So
it
yeah, I mean, going up.
is it time to buy gold stocks, or is it time to try and work out which are actually gold stocks and which are just people pretending that they're drilling in the ground?
Yes, so I'm definitely pretending drilling in the ground's always a great strategy. And if you've if you've got a steel stomach, then by all means do that one. But as you know, I'm going to say to you, be balanced, take some ETFs, I mean, buy some Kruger runs if you've got somewhere to put them. Take some equity because you really can get, as we both know, you can get some fantastic leverage from the equity position. But as we had that debate last time, your position is go if you wait, you miss the returns, and of course this is true. And I'm always, the equity team's always more inclined to say, hang on, let's have a little bit more evidence before we go out there. So there's that tension between the two idea sets, which I think is very, very constructive. So yes, I would be tempted to say if you're going to have a balanced strategy, then just get out there and get some positions, and you should be looking for 10x plus on anything you do on the equity side. That should be your theory if you're going to have a balanced portfolio. But as you said, most people do not do this, and it's more exciting to go direct. I would always say, for most people, the best idea is to start getting in when you can see some JORC results coming down the track, and you have some sense they might be quite good, etc., etc. If you want to get it early, and then after that, you want to get in at the point in where you know what the resource estimate is supposed to be, and then it's just about the last step of funding to get going.
Yeah, but
So
there's no
those would be
fun.
the two kind of key
There's
entry
no
points
fun
for
in
us.
that. I like this sort of, hoping for the best. Like stick the dart at the back of the FT and hope for the best. That seems to be the more popular thing. I mean, I think it's one of those things that we had in May, June. We obviously had everyone and their mother going into Bitcoin Treasury, but obviously that worked really well, didn't it? And now we've actually got quite a few companies going into, oh, actually, we're going for gold. And then they've got and then there's the I was going to say bastard child, but you probably can't say that anymore. There's the amalgam, the strange amalgam of we're going to be a gold miner, which is going to tokenize our assets with crypto.
I mean, the tokenization thing is fascinating. We're still of the opinion that tokenization is no more than a way of getting around issuing full paperwork for an equity raise. However, it's there. In some ways, tokenization is kind of more interesting than crypto. So we have been, keeping an eye on tokenization, expressed some opinions about that. The Fed's not the Fed, sorry, the SEC in the US has got very tied up with the whole thing, and really, I mean, we're pretty sure that they're in the end, at some point when they get around to focusing on it properly, they're just going to say, look, this is an equity issuance. If you want to have a lower level of paperwork, fine, but in the end, it's the equivalent of equity issuance. But in the end, you're going to have to issue some paperwork, whereas at the moment, you don't really have to do that. The strategy itself, digging out the gold and then investing in crypto. Um, I mean, you're really becoming a forex business, aren't you?
Well, there's nothing wrong with that, is there?
No, not at all. But I mean, call it what it is, I suppose. You're
Um,
looking you're mining both crypto. I mean, yeah. I mean, it's a really interesting kind of story that, yeah, it has parallels and differences.
Right, I just wanted to talk about quickly because just one or two headlines that there were this week. The bond markets. I always think the clever people and educated people in the financial markets always talk about the bond market and sort of it's the equity market is just the sort of the tail of the bond dog, and so basically the equity market just does whatever the bond market does, or it's sort of one, that leads to the other. I always think it's actually rather more equal than that, and sometimes even the other way around. Plus, I don't care about the bond market at all because it doesn't really affect me, directly because I don't actually work in it. So, but if you're an intellectual writer like Callum Pickering in the Telegraph, bond markets show the world is flirting with disaster. And so every time I've seen that in 35 years or even more, actually, probably from back to 1973 when I first started looking at this boring area when I was 7 years old, they always say, oh, the bond market's going to do this and the yield curve's doing that. And it's always bullshit. It's always wrong. But then all of a sudden, you have a 2008 or you have an 87, which has nothing to do with that at all. It's just somebody pressed the wrong button, somebody oversold, somebody panicked. And it's nothing to do with these macro things. Is there a bond problem? Is there a massive US debt problem? And can't they just sort of press a button and just get rid of that problem, which is what print money. You have your own currency, you print money, so therefore debt and bond debt is a artificial situation.
So, one of my favorite charts of my whole life was one that was presented to me when I was a relative child at the London School of Economics. So, after I'd read biochemistry, decided I didn't want to spend my life in the lab, and went and read mathematical economics. There was a fabulous chart that was shown to me and what it effectively did was it took historical data going back about 300 years for the UK. So it interrogated, the accounts of the great houses, etc., etc., to look at what happens to inflation when the state, so historically that would have been obviously the king and the most powerful aristocratic families, raise money through to modern times. And the reality is that every single time they borrow, they inflate it away. That is the history of governments borrowing, of the state borrowing. You could argue exactly the same thing is going to go on in the US. So, and certainly, the way for a left of centre government is always in the end to inflate away the money that they borrow. And in terms of equities, as we both know, some sectors will do very badly out of that. So if you are a growth stock focused on the UK economy, that is going to make things very difficult for you. But if you are a bank or an international trading stock, you could benefit handsomely from that situation, and therefore your investors could do so as well. I think there's something to be said as well for miners because they're mainly digging assets out of the ground or looking for assets outside of the UK. And also they're often priced in different currencies to sterling, the assets themselves. So pros and cons for the equity market. I would tend to agree with you. I also think I remember having this discussion about, did I become a credit analyst, a bond analyst, or did I become an equity analyst? And I think again, one of the most insightful pieces of information I was given to help me decide was, can you get excited about 8 basis points? And I thought, no. So it was equities. Also, I think it's more interesting.
Right, just related to that, why Starmer has not been sunk by the bond market like Liz Truss was.
I think the difference is that Starmer has played the game and kept the bond market magnates apprised of his thinking or of the government's thinking. I really think the main problem for Truss et al. Was that they ignored advice about how to communicate with the market. And so they were punished because the market said we cannot deal with this. Your particular strategy may actually, I mean, when you look at it on paper, it wasn't horrific. So it was all about the communication, and it was all about therefore their lack of political skill. Actually, I would say on reflection, and I think whatever criticism you have of Starmer, he does. They have a frontline team who are politically skilled at some level or another, certainly more so than Truss's team proved to be.
What, like
So
Angela
I think
Rayner?
they've kept the communication going. But eventually, I mean, eventually they will be sunk by it. I mean,
Well, no,
the
I think no. I
solution that
think
they're providing.
the
Yeah.
answer to the answer that yours is obviously a perfectly is a perfect answer. My less than perfect shooting from the hip answer would be that basically the markets know that he's taxing people to death, whereas the Liz Truss thing was unfunded tax cuts, which really spooked the market. And so unfunded tax cuts are actually worse to the market for some reason than spending billions extra and then taxing people half of that. But it doesn't matter because if you're taxing people, then the markets are actually okay with that. So the reason there isn't a panic because in November, whenever Rachel Reeves, if she's still there, will deliver another 50 billion pounds worth of tax rises, and that will probably make up for half of the 100 billion that she's going to spend, which is extra. But the markets say, well, at least you're taxing people, so it's okay. So that's really the thing there, which is which nobody's dared to say apart from obviously me. But it's that. So it's worse losing 50 billion through unfunded tax cuts than losing 50 billion from the difference between raising taxes and spending more.
So you're saying that you think the markets dislike an unfunded tax cut more than they dislike spending on the NHS, for
Yes, they,
example.
they don't mind you overspending and overtaxing, but they don't like you, let's say, overspending and undertaxing, or or just not spending very much. And they don't even like. They prefer you to, I suppose, spend more. Well, no, let's get it right. They would prefer you to. They hate you spending less and they hate you cutting taxes. That's probably the two
Okay, so I'm
things.
going to slightly disagree with that. I understand where you're coming from, but what I'm going to say to you is that there's a nuance there, and that if you can cut taxes with the aim to stimulate economic growth, which that I mean that just does work. The
So it
question
does
is
work or it doesn't
timing.
work.
It does work. So the question, I mean, if you cut taxes, you stimulate economic growth. There's no getting away from that. It's cutting the right taxes, of course, there's the skill in it. And the other thing is timing. And as a result, you then have to communicate to the markets very clearly what your strategy is and how you're going to time it. That's really difficult because the tax is complicated. And the other problem you've got as a government is that you are political. You're only there for 4 or 5 years max, and nobody trusts you anyway. So without an independent central monetary authority, e.g., Fed, Bank of England, the markets just don't believe politicians will deliver on the timing. And so then we come back to the default position, which is yours, essentially, which is what you've articulated, which is that as we cannot trust them, the only thing we are going to trust is if they say, right, we've implemented huge tax rises across the board to pay for the additional spending. And the market takes the view, well, some of that's going to get inflated away. So we take that on the chin. But at least we're going to get our capital back and we'll get a yield in the interim. That's the thought.
Yeah, yeah. No, that's good actually. I like see what you did there. That's good. You've cleared up something which was nagging me since in my 6 weeks at the LSE. I obviously left there because I don't know how long did you do the full 3 years or something? What did you do?
No, I did a postgraduate, so a year.
Well, I did 6 weeks because I found it very boring. I was studying economics, which obviously is completely useless for what I'm doing at the moment, and would have been totally out of date. But then I went there for a few lectures. It was so boring, couldn't stay awake. And then I read somewhere or heard, that Mick Jagger was also at the LSE, and he was actually only went there for 6 weeks. And he left. He left because he called in to join the Rolling Stones. So I thought if I leave after 6 weeks, like he did, I would have the same result.
And has that panned out that way?
It's still, I think there's still a chance of a late flourish. And also, I'm still younger. I mean, they're 80 and they're still doing it, right? So I mean, there's still a chance that
That's true.
we
I
can get
believe
you
the
know
Foo
we get
Fighters may be looking for someone.
Yeah, still,
It's
still,
almost as
still
good.
write the songs and everything else. It could be the AC. We could call ourselves ACF or something. ACF, ACF Rock and Roll Band or something. But just
ACDC,
finally, before we run
ACDF.
out of time and run out of sanity, the obviously the big headline of the week, which is partly fiscal, was and is Angela Rayner, who I mentioned briefly once, and you missed it, but paying stamp duty on your first home rather than your second home, and switching and stuff like that. But it was, I think if it was a second home, it would have been 70 grand on an 800 grand property, and she only paid 30 grand on as a first home, which I think is more than enough. 30 grand is more than enough. It's like a year's work for the average person, probably even 2 years actually, if you're trying to save that amount of money. I mean, the other point, and it's a bit like the COVID rules, if the rules are so idiotic and so difficult and so fiddly that even a politician gets into a sort of a tiz about it or gets into a mess about it, why the hell is that sort of rule there? And does it really make any money? And also the final thing is you're stopping. There's a massive barrier there, 70 grand barrier or a 30 grand, well, it's a 30 grand barrier to getting on the property ladder. And surely we want as many people as possible to be on the property ladder. In fact, the government should be paying you to buy. Should actually be paying some of your mortgage or helping you get on the property ladder.
Well, I agree with you, and as you know, I'm no fan of Rachel Reeves per se, but I do think this is an absolute nonsense, and at a higher level, all it does is discourage people from getting into politics because people who might have the characteristics that we would all like to vote for, whichever side of the fence you're on, it just discourage another discouragement. The economic, market issue that it creates a barrier to entry is a market drag, is a market inefficiency. I think is probably largely correct. Yeah, I mean, what more to say? The only thing I sit back and think is how the hell did she get into that mess? Um,
Because no,
and
because the rule no,
clearly,
because the,
because
the
to me,
rules the rules are complicated. The rules are complicated, and
yeah,
if you're sort of square person or a scared person, you'll just say, oh, I'll pay the 70 grand or the 30 grand or whatever it is, and just do that. The lawyers and other people are not helpful. Accountants are not necessarily helpful either. You can't trust them. It should the whole process should not be one where you require a professional to actually tell you what to do. It should be transparent and easy enough for even somebody like Angela Rayner to understand. Somebody with no
yeah,
education and et cetera, et cetera, and an ordinary person, so that's rather rude, but just an ordinary person to understand. And it isn't. And
yeah.
why should you have to pay lawyers and accountants for something which actually shouldn't even be there in the first place. It's a result of overspend and overreach in government, and that kind of thing. So I just think it's wrong. It's absolutely wrong, and for that reason alone, whatever happened with Rayner or anybody else with these things, probably let her off. Even though I'm obviously not Mr. Labour myself, but it just seems to be the whole thing is wrong. It's complicated, and HMRC will then be investigating her. Oh, well, that's going to be really nice. That just so you're going to have them on your back. You haven't got to, they can take you to court. You can't win against them. It's all that sort of stuff like that. So all wrong, and it needs to change. It's not appropriate to the 21st century at all, I think. So there we go. That's my rant, which is just at the end of this particular thing at the moment. Normally it's somewhere in the middle, but here we can just get rid of it actually. But any other final words from you?
Yes. Final words. I just wanted to talk very briefly about the Met One deal that I think was announced this morning.
Yeah.
I think that's right, Zach, isn't it?
Yep.
Yeah, so their part their stake acquisition in Evolution, which is an Australian listed entity. So I think they're taking about just over 10% from their deal. They paid about a 10% premium. I think it's correct to say that they could up that stake up to 17% because they're part funding Evo's own development. And it is for a bit of Tanzanian graphite. numbers, break it down, look at their 10% stake. In very round terms, it could be worth around 25 million MBP to their market cap, which is currently about 30 million. 33 million, something like that. So looks like a pretty good deal. And we love graphite, actually. It's in some ways a little bit like tungsten. It is really important. It is currently relatively poorly understood by the market in terms of mass understanding. I do think it suffers a little bit from, if you say graphite, people think, well, how many pencils can you sell in the modern world? And of course, it's that's nothing to do with it. Although the art market is still a measurable amount of graphite sales globally, but that really has nothing to do with it. What's much more important is steel production, and of course, electric vehicles. So I think it's a really, really interesting commodity. One of the things that it suffers from is that, like a lot of these commodities, there is no clarity on pricing. It's not like gold. There's no open liquid market. Every deal is individual on the offtake side. But it's a fascinating area. It's a really important commodity. It is poorly understood. QED, there's an opportunity there for investors.
I just finish off on that. We've got less than 2 minutes, but just on terms of Metals One, which is a company I have been following, it seems to be since their big rally that they had from 1p to 50p, which still rather mysterious, even more mysterious as it came back down from 50p to 3 or 4p now. But they have been on the front foot. They have been almost like the swing trader, the go-to deal maker in the sort of space on an international scale. So very impressive that they've sort of come out of the woodwork. Before they were just another earth scratcher in Scandinavia. Nobody liked them. Nobody wanted to talk about them at all. And they're almost living up to their name. They're Metals One. It's so if you've got a deal in the mining area, metals area, whatever it is, and nobody else is interested, you give them a call. It's a bit like the 18.
Yeah, and it's a really interesting strategy to position yourself in that way, create enough noise, and then deals start coming to you.
Yeah.
It's much more efficient than trying to get a corporate financier to look for deals for you, which incidentally most corporate financiers feel is a very difficult job. But it's much better to attract them to you. So it's smart. Let's see how it develops.
Christopher Nicholson, Managing Director at ACF Equity Research. Thank you very much indeed, and hope I will enjoy my anniversary. I'll enjoy my birthday, and hopefully there'll be less of me to see this time next week.
We look forward to it, Zach, very much. Thank you.